Hey, good morning. It's Mike Zschunke with Berkshire Hathaway Homes and Shift One Properties in Scottsdale, Arizona. Friday morning market chat with Mike. Try to be here Friday mornings, 8 a.m. To go live on Instagram here. What are we going to talk about here? Residential, commercial, and interest rates all over the news this week. Interest rates. So first, let's start with inventory. Homes for sale in the multiple listing service, we're down about 153. 12,681 single-family detached homes for sale. Maricopa County, there's 9,200. That's down about 167. And in Scottsdale, we are 1,107 single-family detached homes for sale, down 43 from last week. So we are back to October levels. Actually, we're lower than October of 2022. But there's more homes under contract, and they're selling at fewer days on the market. So things are moving. It's just a little tougher to get business done these days just because of inventory. Let's see. Sales prices, flat, pretty flat month over month. Overall, we're about 4% increase year over year. So still going up there. Remember, it's not always price. 45% of the transactions had seller concessions, with an average seller concession of $9,500 on a, $450,000 average sale price for a house. That's 2%. So remember, it's not always price. Your neighbor sold his house for $1 million. He may have given, $20,000 in seller concessions. We don't really know. You got to look at the details. So pretty balanced market overall. It's funny time of year. Everybody's preparing for January through March here. It gets pretty crazy. If your house is sitting on the market, it's priced too high, or you have the wrong agent. But it's probably price. It's funny. We're running around with a client now. Good referral. Young couple looking in the $750,000 range, and he's a numbers guy like me, so it's fun. Detailing and showing him the prices, very analytical. And he said to me the other day, he says, "You were absolutely right. If a house is priced right, it has multiple offers and sells immediately. The ones that are priced too high are sitting on the market." And, we actually made a couple offers just to see the sellers are, asking too much money. They're on the market for 150, 180 days, and they haven't gotten any offers. So maybe they don't need to sell. That's fine. I would say the right property comes along when the time is right for everybody. So commercial, still working on that shopping center deal, getting close. I think we're supposed to moved up closing to next Friday. So a lot of emails going back and forth yesterday. Attorneys and everybody getting things wrapped up. It's getting exciting. Can't wait to tell you the details on that one. It's fun. It's got a little bit of everything. It's, special servicer, bank of a lawsuit from the government of Mexico against one of the clients. So it's fun. It'll be a good book when we're all done. Anyway, listening to Hessam Naji. He is the CEO of Marcus and Millichap, the largest commercial brokerage in the country. Hessam? Yeah, Hessam. He says, "Unfortunately, all asset classes are being lumped together and judged by office space. The whole back to office thing, that's really taking a toll on older office buildings. New office buildings are doing all right, but the number one asset class in commercial is industrial warehousing. With the growth of e-commerce, if you're familiar with Arizona, you've been along the 303 out there, you see all the tilt-ups going. The big, huge industrial warehousing. That's the number one asset class right now. And interesting, small local retail strip malls, kind of like the shopping center we're working on. They're pretty hot too. They're seeing a lot of rent renewals and triple net rent, and there's kind of a sense of community coming back, and people are seen to be supporting local businesses, local restaurants. So that's good. Good to see. It's a good investment. And multifamily is good as long as the debt on the property is solid. There were a lot of new investors took their weekend class in multifamily investing. And like I always say, commercial properties are not financed with your own money. Nobody just writes a check. So they're financed. There's, some of those 7, 8, 9% notes on these big commercial multifamily properties. They're going to struggle. Well, New York rents were down for the first time in a long time. So that's nationwide. But yeah, multifamily will be interesting. I think, people still need a place to live. Housing's still kind of expensive for a lot of people. So people are moving to apartments. But are we building too many? I know in Scottsdale, we're putting up 1,500, I saw the other day a new project, 1,500 apartments at 101 in Scottsdale Road. So it's, I don't know, it's an interesting asset class. So don't take a weekend class and don't waste your money. Call somebody, get a mentor and let them teach you. So there's a lot of things that people don't think about. Traditional lending in commercials, super tight, but there's record amounts of private money out there. They're sitting on the sidelines. They're waiting to jump in as cap rates adjust. Cap rate is it's basically, in the simplest terms, cap rate is your return on your cash. So as prices come down a little bit, you get a better cap rate. So they've taken some time to adjust and grind through the market. Real estate doesn't happen overnight. What did I see? If you bought $1 of Home Depot stock in 1981, you have $1 million today. That's pretty interesting. So, like real estate, it's a long-term investment. So, interesting. Another thing, Citigroup shut down its muni bond underwriting business. That is underwriting loans for states and local governments. Does that tell you there's a credit risk in local governments on buildings and things like that? I don't know. Citigroup, historically known, they're huge. They underwrite government bonds all day long. So, but they're shutting that down. So, I don't know. You read into it what you want. So, anyway, let's talk about rates since that's the big news. For every person celebrating rates are down, great. I'm all for. I'm excited. Mortgage rates in the sixes now. 6.62 yesterday. I don't remember. 6.62. But anyway, even mid-sixes. So rates, 30-year fixed rates are down in the mid-sixes. 10-year bonds or 10-year notes are under 4%. Fed chair came out, the Federal Reserve came out this week, and they control monetary policy, not fiscal policy. They said they're going to hold rates steady. Me, being the dork that I am, I watched Chairman Powell's speech twice. He never said rate cuts. Not once. So you got to remember, we're heading into an election year. So there's a lot of moving parts. There's a lot of news out there, fake news, real news. But Chairman Powell said, we're going to sit and watch the data. He never said we're cutting rates. But markets being efficient, there's a lot of easy access to trades out there. There's a buyer and seller for every asset at any price. So, of course, fear of missing out. Everybody jumped into stocks, and the yields on bonds shot down. So, it's interesting. It'll see where it goes. We're here. Great. If you're gonna finance a property right now, probably not a bad time to lock in a rate. If they're gonna go up, I don't know. Are they gonna go down? I don't know. I'm not buying into this lower rate thing just yet. Actually, listened to John Williams this morning. He's the New York Fed president. And I like him a lot. He used to work under Janet Yellen, who I used to like until she got crazy. But and he's a pretty liberal guy, but I still like him a lot. Can I say that on here? Yeah, he's a good guy. He looks at the data. He's very data-dependent, data-driven. He also said, we're not talking about rate cuts. We're looking at today. We're looking where the economy is. If the data changes, then we'll adjust our position. But he says, right now, let's just hold states' rates steady and see where this goes. Are we going to get inflation under control? The general consumer, life is pretty expensive. There's that Home Alone thing going around. What's that little kid's name? Should have done some research on it. His grocery bill was like $20 when that Home Alone movie came out, and now it's $72. I think that's what most people are feeling. So it'll be interesting to see where this economy goes. And again, heading into an election year, you can't believe anything. So pretty interesting. Can't time the market. Anyway, if you want to buy or sell and the numbers work for you, residential, commercial, investment property, land, whatever. Let's look at the numbers and see what works. You know, you cannot time the market. Like I said, real estate's a long-term investment. We got a lot of people coming here from California. I always say follow the population flows. I don't know if you're a baseball fan. What's his name? The guy who signed for the Dodgers, Otani or Osani or something. Got a $700 million contract with the LA Dodgers. That's in California. Any other state, that's a $300 million contract. So, got a lot of people coming to Arizona just for tax breaks. So it's interesting. Look at the numbers for your situation. See what happens. If you have a question, give us a shout. We're here. We're happy to help. If you're a new agent, give us a call. Happy to mentor you and help you through a deal. We kind of think out of the box, and it's my job to stay emotionless. It's especially like with this deal I said to this client the other day. It's people getting a little excited. It's my job to keep everybody on the level and keep emotion out of it. If the numbers work for you, great. If they don't, that's fine too. If we can help you, great. If not, we'll point you in the right direction. So anyway, have a great weekend. A lot of paperwork today, wrapping some things up, and then looking at some properties later on, some land this weekend. So have a great day. Be smart. Be safe. We appreciate you watching. Thank you so much. We'll be here Friday on Instagram, 8 a.m. We'll be here next week too. Yeah. So we'll talk to you then. Thanks. Bye.